You could think of Bitcoin as the apex commodity. The top competitor would be gold, worth $10 trillion. And if Bitcoin's digital gold, it's better than gold. And it's better than gold because it's got an absolute supply cap. The production is rapidly approaching zero. After 2035, there effectively isn't any material new production of Bitcoin for the next 100 years. And that means we're totally capped. People compare Bitcoin to gold, but Bitcoin is gold without the liabilities and the risks of gold. It's kind of pharmaceutical grade gold. Gold is going to have systemic inflation. Miners are going to make more gold. It's hard to audit. It's very difficult to transfer. It's expensive to custody. It's very expensive to authenticate. Those are all the liabilities of gold. We know about that. The reason we know it doesn't work is because gold has not been appreciating in value for quite a while now. Now, Bitcoin solves that problem, but it enhances gold with digital audit, digital transfer, digital custody, decentralized robustness, integrity. It's got a global utility and appeal, and the technology industry is enhancing the value of Bitcoin. One day you will see every smartphone in the world will have support for Bitcoin built into it. And even right now, you can download dozens of apps that handle Bitcoin. And so you can't download any app that moves gold around. And that's why Bitcoin is the apex commodity. It's just better than gold. But to say that and stop there is really underselling Bitcoin, because Bitcoin's also the apex property. You could think of it as Cyber Manhattan, 21 million blocks in cyberspace with appeal to 8 billion people worldwide. What if everybody wanted to live in Cyber Manhattan? The top competitor in the property market is New York or London or Paris or Tokyo. And if you owned a city block in New York in the last 100 years, you probably made a lot of money. But the problem with owning buildings in New York is you have maintenance cost, depreciation, zoning risk, property tax, physical nexus. You can't move the building from one city to another city. It's immobile. It's illiquid. And if you want to sell or buy the building, you have to sell it all at the same time. And it's very expensive to do that. And it takes a lot of time. So Bitcoin improves on that by creating a building that's indestructible, immortal, immaterial. You can scale it. You can buy it $37 at a time. You can move it with high frequency. It's portable. It's global, universally desirable. And, it's like owning a building, but if you're going to own a building in Buenos Aires, why wouldn't you have a building that you could teleport to London, Paris, or Japan when you needed to and sell it? It's just much better idea. So Bitcoin is better property than any kind of physical property. But Bitcoin's also the apex technology, right? It's a bank in cyberspace run by incorruptible software. It's open to everyone on Earth. So you could think of it as digital finance. And the top competitor in technology is Apple. Apple's the most valuable company in the world, but right behind it is Google and Microsoft and Amazon. And big tech is an obvious good idea. But what if I could actually have a digital monopoly that's global, that everybody wants, but without the management team, without the employees? Right now people want to unionize Amazon. They're talking about unionizing Tesla. Well, you can't unionize a company that has no employees, that is no company. The management's never going to screw up if there is no management. You've got corporate taxes and tariffs and product cycles. We're on the iPhone 15. What about the iPhone 37? Will that be the one that you want? Because Bitcoin in 100 years is going to be 1/21 millionth of all the money in the network. So the product was set a decade ago. It'll be the same 100 years from now. It may be the same 1,000 years from now. So getting rid of product cycles and getting rid of all the liability risk that comes with corporations, is a big upgrade for Bitcoin. And what you do get is this global network of holders. You get legal and ethical superiority because, a commodity is always superior to a security because there is no issuer. There's no management team to mislead you. You don't have to trust. You can verify yourself. And there's really no operating risk or execution risk because it's just running itself in a timeless fashion on a global basis. So if you like technology, then Bitcoin is the apex technology. But some people invest in money. And what's the top competitor? The sovereign debt, right? A bond. So the U.S. Treasury bond is the treasury asset for most corporations, most governments. There's hundreds of trillions of these bonds out there. But Bitcoin is digital money, and so it's a non-sovereign bearer asset. It serves the value of a bond, but it doesn't have systemic inflation or counterparty risk or mandatory custodians, and it doesn't have the real problem, negative real yields. If the monetary inflation rate is 7 or 8% and the bond pays 5%, the after-tax yield is 2 or 3%. So it means you've got a negative real yield of 5%, which means your money's going to go away. It's going to be cut in half every 14 years. And every bond, every sovereign bond has a negative real yield in every country, always. Bitcoin, on the other hand, is digital. You can self-custody it. It appreciates much faster than fiat, and it allows you to escape the local currency risk. So, and it's the longest duration asset. A bond could be 30 years, but Bitcoin is forever. Bitcoin's a 1,000-year asset. I mean, it doesn't expire. Companies don't last 1,000 years. Buildings don't last 1,000 years. I mean, I guess the closest thing to something that might last 1,000 years is a bar of gold, but gold isn't scarce. When the Spanish came to the New World and the conquistadors stole all the gold from South America, they brought it back to Spain. They created massive hyperinflation and tripled the supply of everything and crashed their own economy in Spain and the rest of Europe. So there's always been inflation, even in gold on the gold standard, because it's not scarce. And now a lot of talk about the ETFs coming. Bitcoin's going to be the Apex ETF. You could think of it as a global monetary network. It's the first ETF that's based on a synthetic asset with an absolute fixed supply that also has global appeal. It's competing against the S&P index, the SPDR, SPY, and it competes against some other monetary ETFs like GLD or BOND or the NASDAQ index. But ultimately, Bitcoin is destined to rise above them as the global index because it doesn't have asset inflation. All these other indexes have asset inflation. If you buy billions of dollars of the S&P index, it cranks up the stock price of all the companies in the index. They issue more equity. They basically dilute their own stock, right? And so you're always going to create more of these things. Bitcoin's the only ETF and the only index that is absolutely capped. And if you combine that with the global brand appeal, the lowest investment risk, the best growth drivers, the best tax treatment, right? The longest holding duration, what you've got is the winner.